Welcome to Part 12 of Sonoma County's 12-part Insurance Requirements for Contracts Training Program. In Part 12, we are going to discuss builder's risk insurance. When we talk about builder's risk, what we're talking about is damage to a construction project that happens to that project during the course of the project. So, what could happen? The building or structure could be damaged before it's complete. In fact, recently, one of our Bay Area cities had a situation, and it happened twice in a 2-year period, where they were constructing multi-family housing, and I believe a number of the units were designated to be affordable housing. And I guess there were some people in the area who were objecting to having that multifamily housing. And twice, they believe they were arson fires, twice the project during construction was damaged by arson fire. That's something, it doesn't always have to be arson, but that's an example of something that can happen to a structure while it's being built during the construction. You can also have damage to materials and supplies that are intended for the completed project before they are actually installed. They could be on the site, or they could be off-site storage or in transit. So if somebody is bringing, if our contractor is bringing those supplies to the job site in a truck and the truck gets involved in an accident, those supplies can be damaged. That's the kind of protection that we want. The county, now, where can this come out? Well, recently I've seen two kinds of contracts. The more common contract is a situation where we own the project. It's our project. And the project is being built for us. An example might be the construction or the expansion of the terminal at the airport. By the way, is that finished? No, okay, never mind. Okay, but anyway, you can see that during the construction time, it is possible that there could be damage to the construction work. We want to have insurance to cover that. Without that insurance, it's possible that the project might never get completed. So we need to have coverage. And it's not only fire, it could be theft, it could be vandalism, it could be windstorm, I mean, a number of different causes of damage to the project in construction. We also had some situations, this is not so common, but it's another example of where builder's risk insurance was needed. We've had some contracts where we made loans to not-for-profits to develop affordable housing for disabled veterans. It's not our property, and it's not going to be our building, but we have lent money on this. Well, anytime you lend somebody money on a construction project, they need to have insurance to cover that project in case it's damaged during the construction. Otherwise, we might not have gotten paid back on that loan, and the project might not have been completed. So we've already talked about the 3 basic exposures that we might have during the course of construction for a builder's risk exposure. So let's think about who suffers economic harm potentially if there is damage to a project during the construction phase. If we own the project, we suffer financial harm if there is damage to it during construction. The general contractor has an interest in that project and would suffer economic harm. And subcontractors. So, the best practice is to provide, all of these parties have an interest. All of them have some economic skin in the game. Well, you could have 3 separate builder's risk policies, one to cover our interest in it, one to cover the general or prime contractor, and one to cover each of the 40 subcontractors. Great. That would be a real mess in the event of a loss. How do you determine at which stage of the project which of the property is owned by the county, which is owned by the prime contractor, what's owned by the subcontractor? And furthermore, if one of those parties causes the damage, you'd have an insurance company paying it, maybe our company paying for it, and then suing our contractor's carrier or our contractor. Oh man, you'd never get any projects done. So to remove litigation, to ensure prompt handling of claims and appropriate handling of claims, best practices are to have one builder's risk policy cover all of the interests of the various contractors, subcontractors, and the owner in one policy, and that also eliminates litigation to a great extent because an insurer doesn't litigate against its own insured to recover what it's paid. Now, the question is going to be, so whose insurance policy covers it? We here at the county have a property insurance program that is extremely broad and relatively inexpensive when compared with the kind of property and builder's risk coverage that's available in the commercial insurance markets for contractors. So, when we can, we will provide the builder's risk coverage to cover our interest, the prime or general contractor's interest, and, as we say in the contracts, subcontractors of all tiers, because there are subcontractors and the subcontractors have subcontractors, and it goes way down the pike. So we get better coverage than if our contractor bought it. It's less expensive. And by the way, if the contractor buys it, who do you think is paying for that builder's risk insurance anyway? We are. They just put the cost of it in the bid. So that's no particular help to us. And just so that the contractor knows they've got some skin in the game, the template requires them to contribute to the deductible. They pay the first dollars of the deductible. So they are incented to be careful, to try and protect against loss, because if there's the loss, they pay the first dollars of our deductible. Now, it would be nice if we could do this for all construction projects, but we cannot, because our policy will not respond to certain projects. We cannot use our policy if the project is an excluded one under our property policy. So, in our construction templates, at the top of the template, we give you this big, bold heading to tell you, be careful here. You can't, the basic template shows that we're using the county's policy. But then it says, first of all, delete the highlighted language. You can't leave that in your contract. You must contact risk management before putting this thing out to bid if any of the following conditions are involved: dams, piers, roads, bridges, wastewater treatment facilities, standing timber or growing crops, extensive installation of landscape items, work near a body of water, river, stream, or canal, work adjacent to the ocean, and work that takes place on property that is not owned by the county's water agency, or the county's open space district. All of these, for one reason or another, would not be covered under our property policy. So if we put in the contract that we're providing the builder's risk to cover us and the general contractor and all the subcontractors of all tiers, we lied. And guess who'd be paying for those claims? This is a rather tricky situation. We encourage you, all the time to contract risk management and talk about it. We also point out that we want you to contact us before any project where you think the cost is going to be $2 million. It may be covered on our policy. We may decide to do it. We just want to know about it. When it's a situation where our policy will not cover it, or we don't want our policy to cover it because the risk is very high, then we will likely require the contractor to provide builder's risk. And we will require that their policy cover our interest in the project, their interest, and the interest of all the subcontractors. In other words, we still want everything in one policy. It's just a question of who is going to purchase the policy. Vetting the coverage is rather difficult. There is a property insurance certificate where they indicate limits and the like. There's really not very much standard in there. If you need help, be sure to send a help request to risk management. That concludes Part 12 of Sonoma County's insurance training program.